But first up, we're going to have a conversation about something that's quite different, it has to be said, talking about this issue of capital gains tax exemptions, particularly for startups. In yesterday's Australian Financial Review was the backbencher should be on the front bench. I've been complaining about that for a while now. David Coleman, thanks for your company.
Good to be here, Peter.
All right, let me get right into it. Sure. How realistic is it that this idea will be taken up in the current sort of budget climate? It's one of those things that stimulates growth. People talk a lot about growth, but it does also take some revenue out of the equation, which in the short term is risky business to some extent.
Yeah, look, I think it's quite realistic, Peter. The amount of the cost to revenue would be quite minimal, and we really shouldn't be thinking of tax reform as sort of code for tax increases like some think tanks and the opposition do. Tax reform can mean reductions in some areas and changes in others. I think this proposal would be a very significant boon to the startup sector.
So take us through the proposal in a little bit of detail.
Sure. So basically my proposal is that for businesses that are companies that are less than 2 years old and have less than $1 million of revenue in the last 12 months, so basically your small startup company, that if you invested in that company and you subsequently sell that stake in the company at a profit, that you wouldn't pay capital gains tax on that profit.
And that is to encourage people, obviously, to invest in those companies.
Well, indeed. So if you're the owner of that company or the founder, you can go to investors and say, well, if you invest in, say, an investment property or in BHP shares, you're going to pay capital gains tax on the profits. But if you take a chance on my little startup, it might work, it might not. But if it works, there's no capital gains tax, and I think that would be quite a powerful tool.
Okay, why do they need this? I mean, I'm pretty sure I know the answer to this, but I'll hear it in your words. Why do people to invest in these sort of startups need that sort of incentive that they won't have to pay that capital gains tax on doing so?
Well, look, I think there's a pretty broad consensus, Peter, that as a nation we do not have the depth of that entrepreneurial startup culture that some other places do, and the obvious examples are Silicon Valley, Israel, and so on. We all talk about that. Well, it's an interesting question. I think partially it's a function of our small market size, because it's hard to take something small to something spectacular. Some businesses have done that, but it's tough. And it's also partially a function, I think, of our broader pragmatic culture as Australians. I think most successful Australians aspire to work for a household name rather than a little startup.
Well, yeah, on that, I mean, it's sort of particularly, I suppose, in the current economic climate that we're in. I know that, for example, and slightly apples and oranges here, but not entirely, I know that the exploration sector in WA, for example, struggles to attract investment at the moment because the mining boom seemed to have come off. People are running towards blue chip investments, which are not really in the sort of space, well, not at all in the space that we're talking about. Although this would also presumably be something that blue chip investors and those companies, if they look to invest in smaller startups, can then look to do with the same sort of tax advantages.
Well, that's right.
Or is it just individuals?
No, it will apply to companies as well. There are some existing exemptions, a thing called early stage venture capital limited partnerships that applies in some circumstances, but basically what I'm saying is to take that principle and apply it across the board. So it would apply to individuals, it would apply to companies, and obviously, as the Prime Minister said, we want to encourage the industries of the 21st century. The things that were the big growth industries of the 20th century, frankly, probably won't be in this century. And if we can give those nascent industries and nascent startups a little bit of assistance through the tax system, I think we should.
A tax cut, which is effectively what this becomes, designed to stimulate growth and investment. A tax cut is always something that you can do mid-term without having to worry about a mandate as such, because it's unlikely to get blocked. Everyone sort of wants tax cuts. It's harder to get tax increases through the parliament, or spending cuts for that matter. In a broader sense, though, not necessarily on this particular policy, in a broader sense, there's a lot of talk by the new Prime Minister about innovation and investment and growing the pie and all the rest of it. Is your view that putting together some sort of package for the next election is what this is really all about? That's the raison d'etre here? Or is it about doing a lot more before the next election? I'm talking about that disjuncture between mandate versus getting a mandate and therefore overcoming a difficult Senate. How do you see the balance?
Well, look, I think it's about solving the problem. And, the problem is, or the issue is, that the global economy is changing. And in the Prime Minister, we've got someone who this isn't a theoretical thing for him. He's actually built significant digital businesses and he's got great expertise in this area. So whether the initiatives take place before the election or in the context of an election campaign or a combination of the two, doesn't really matter, to be honest. It's basically about getting things done to help diversify the economy.
What I like about your idea, tell me if there's other logics behind it, but what I particularly like about it is there's nothing I dislike more than governments trying to pick winners. You know, this idea that you have a pool of funds and you say, oh, that's a good startup, or maybe we'll support that startup, and then you start throwing government money at the problem. This doesn't do that, but it does provide an opportunity through tax incentives for others to throw money at it, people that are trying to invest and profit.
That's right. And look, there's a range of views on that issue of the extent to which government should directly, whether through a co-investment fund or direct investment, actually go into startups. I'm probably someone who's more on the tax incentive side than the direct investment side, but they're the sort of issues we should be debating. There's a whole range of different things you can do to support startups, and tax is only one of them, but I think a critical one.
And just finally, you may have seen this coming though, but a logical extension of that is, what's the difference with environment policy? Why does the government do it around direct action when it looks to do it in these more market-based ways, like your idea around capital gains tax?
Well, I think as the Prime Minister said on that, the issue is there's an increase in emissions. We want to reduce emissions. What is the most cost-effective way of doing that, the cost to society as a whole, not just the government? And direct action has proven to work. And all of the doubters and critics who said that the permits are going to be too expensive and it's not going to reduce emissions in the way that's forecast have been proven wrong, because the auction was very successful. It's not about a sort of ideology about what's the best way of doing it. It's about what works in practice. And despite all of the scepticism from the establishment, so to speak, Greg Hunt has proven that the direct action policy works, and I think it's absolutely right that we continue with it.
David Coleman, appreciate your time on Newsday. Thanks for your company.
Thanks, Peter.